Good afternoon, everyone, and welcome to today's market review. We will take a quick look at the US dollar, WTI crude oil, and gold. So, starting with the US dollar, since October, the US government has been hit by a severe shutdown, pausing many operations and delaying key economic data such as inflation and labor figures. Combined with limited but weak private indicators and rising geopolitical tensions, the markets are increasingly expecting another Fed rate cut in October. We have been also advanced our forecast and now expect the next cut in the October meeting. However, with the US economy still showing resilience and inflation pressures from fiscal spending and tariffs, we expect the pace of future rate cuts to be slower than the market anticipates, around 125 basis point cut per quarter through late summer 2026. So moving to crude oil. Oil prices edged slightly higher overnight, supported by the API data showing a 3 million barrel drop in the US crude inventories and smaller declines in gasoline and distillates. However, the broader market remains oversupplied, limiting any upside momentum. And Trump's later comment on the trade talks and the cancellation of the planned Trump-Putin summit may have offered short-term support. But overall, fundamentals point to a continued downside pressure in the coming months. And meanwhile, the US government announced plans to purchase 1 million barrels for its strategic petroleum reserve, which now stands at 408 million barrels, but still far below pre-pandemic levels. Last, gold. Precious metals saw a heavy selling yesterday as panic liquidation and margin calls triggered sharp intraday losses. The rebound in global risk sentiment also reduced safe haven demand. And despite brief bargain hunting earlier the week, extreme daily swings suggest that the current bull run may be approaching its peak. But still, from a longer-term perspective, gold and silver retain upside potential before any momentum fades completely, though the market remains in a highly volatile and sensitive phase. So in summary, the markets are adjusting to a slower Fed easing path, and oil remains range-bound amid oversupply, and gold face a near-term volatility after a strong run. Thanks for tuning in. We will continue to monitor how the markets react as new data and policy signals emerge.